from iron ore hitting its 5-week low to gold and oil prices steady in trade. What are the factors driving the move? My colleague Shreyansi Singh is now joining us with all the details. Shreyansi, over to you.
Well, absolutely, Ashesha. Firstly, it's been a very quiet week coming in because of the holiday trading. But firstly, when you take a look at iron ore, you do have prices hitting a 5-week low despite the quiet trading that we've seen coming in for the rest of the pack. So you do have iron ore falling below that $100 a ton mark as well. Poor industrial profits in China have been quite the drag coming in because the fourth straight month of drop is something that we saw coming in Beijing's industrial profits. So that's something that we're looking at. And even on a year-to-date basis, you do have iron ore that is down 29%. So that's the kind of move that you've seen on a year-to-date basis as well. When you take a look at gold, steady and thin trade is what that one was doing. Bullion was little changed in a quiet day of trade, like I just mentioned. On a year-to-date basis, though, you have bullion registering a 28% uptick coming in. It's been quite the stellar year on the back of the US monetary rate cycle as well. And other than that, there's been safe haven demand that's been perking up the demand for gold as well as the allure for gold coming in as well. Other than that, if you take a look at oil prices, steady and thin trade is what they were also doing, because when you take a look at the WTI 10-day volatility as well, that is at its lowest since 2021. So that's quite the landmark in terms of how quiet it was in terms of oil prices. But we're still keeping an eye on risks for market surplus next year. Other than that, for oil prices, Brent was around that $73 per barrel mark, WTI around that $70 per barrel mark as well, and that's largely where prices have in fact been at the last week gone by as well.
If you like this video, then like, share and subscribe to ET Now.